Welcome, everybody. We're going to get started.
Yeah, let's go.
Welcome, everyone. Thanks for joining us on our webinar. Now is the time to break into commercial lending and make higher commissions. So, all right. So today's masterclass, we're going to be covering a number of things, and then we also have a special guest today. And so we're here to add value. We understand that, the reason you're here is because you're interested in breaking into commercial, becoming a commercial loan broker. And so the barrier to entry is large, and we're here just to minimize that barrier as much as possible. And that's one of the reasons why we had Keith coming and speaking to us, is because he's done it. And so he can give you some pointers, and then also just show you and give you the confidence that you can go from residential lending to commercial. You don't necessarily have to leave residential completely behind, but you can definitely add commercial lending to what you're already doing as your bag of services that you offer your clients. So awesome. All right. So all right. So, and then for those that stay to the end, we always have a bonus. It's kind of our thing. We want you to encourage you to stay till the end, and this is how we incentivize you. So, all right, let's get started. So, my name is Derek Torno. I am the co-founder of Commercial Loan Training. I'm also the managing partner of M5 Commercial Funding. Been doing commercial loans over 10 years now. It's gone by fast. Done almost every property type in almost every state. Our boutique size company, we close a lot of loans. We stay super busy, especially in this current market. And, that's my background.
And I'm Colton Smith. I work for a company called Walker & Dunlop. We're one of the largest commercial loan brokerages in the entire country, doing about, call it $50 to $75 billion in transactions a year, billion with a B. I don't do most of that. I do a fraction of that. I started 23 years ago and doing commercial lending only, started in the residential world, and got some bumps and bruises along that way, and decided to go full-time into commercial finance. Again, I do everything from office, industrial, retail, multifamily, self-storage, mobile home park, hotels, and all kind of different property types as well. From 1 million to largest loan we're working on right now is about 300 million. And everything in between. So that's kind of who we are. Let's get past that. Let's go to the meat and potatoes here.
All right. So, why are the real reasons why we're here? What's the reason that, it's time for you to jump into, commercial lending? And one of the first top reasons is there's over $1 trillion worth of loans that are coming due. And that is just what is available for us to see as, loans that are coming due, the ones that are actually, posted and available to see. There's probably another trillion, that banks and credit unions, they don't have to post. They don't have to show those. But there's a lot of loans, the larger loans that are available for us to see that are coming due.
The way it works is in commercial is that most loans have a shorter term maturity or balloon, hard maturity or balloon date, and it's usually 3, 5, 7, or 10 years. It's a hard balloon or maturity at that time. And so there are a certain subset of commercial real estate investment property lenders that have to that securitize. They sell their loans, and those are the ones that we could see as public data. It's paid, it's hard to find, but it's public data. And those are the ones that have over $1 trillion of loans coming due. But since there's hardly any regulation on the commercial side, the banks and credit unions and all other lenders, including life companies and such, do not have to report their loan information. And they make up of somewhere up to 60% of commercial loans right now outstanding. And so accounting for those in addition could be another trillion at least of loans coming due, maturing in the next year or two. So there's a huge opportunity for commercial loan brokers in the market everywhere in the United States to do these loans.
Yeah. All right, moving on. So the other reason why now is the time is that there's just a huge need for commercial loan brokers. There's not the same amount of competition out there as you see in the residential world. There's very few commercial loan brokers out there, and there's even fewer good commercial loan brokers out there. And so that's the reason why this is the time to jump in.
The estimates are about 180 to 250,000 residential loan officers in the country, depending on what data source you look at. There's only about 12,500 commercial loan officers in the country. So as you could tell, there's just a massive decline in true commercial loan brokers out there. And there's over possibly $2 trillion worth of deals to handle in the next couple of years. So there's definitely a need.
Mm-hmm. And another reason is the current market conditions. So as you know, being in the residential market, there's just very, very low inventory. A lot of your past clients, you did a great job for them. You got them super low interest rates. They are set for the next 30 years because we're probably not going to see those 2-3% interest rates for a while. And so they're not interested in refinancing unless, cash out. So there's just not a lot of deals on the residential side. However, on the commercial side, there is a tremendous amount of commercial deals out there right now.
The other thing that's happening with the market, as you guys have felt as well, is that over the last 18 to 24 months, there's been, rates had been ticking upwards, and then there was a lot of volatility as far as in the markets and rates and such. And so there was a lot of capital, so from buyers, borrowers, and from lenders in the entire country that just had their capital on the sidelines. Now it's still a little volatile, but this is not a political commentary in any shape or form. But the current administration and what they are doing with the economy has actually put some downward pressure on interest rates. And so that combined with the money sitting on the sidelines, everyone needs to put their money to work, and they're seeing this as an opportunity now as well. So not even the ones that need to refinance, the ones that are selling or buying or need to do some sort of a recap to pay off investors or do something of that nature. There's a lot of motivation to do that right now because there's a plethora of capital. So all those things combined is just a whirlwind of opportunity for commercial loan brokers.
Great. Now let's talk about some serious reasons why we're ready to break into commercial lending. And so the number one reason, let's just start from the top, is to make more money. We're coin operated. We want to make more money, and there's a lot of money that could be made, doing commercial loans. And the number two reason is to make more money. So if you didn't get number one, you'll definitely get number two. And if you're smart, you're kind of following along. Number three is going to be make more money.
Let's go.
And so let's go and let's jump into this a little bit more. So here we go. So here's the opportunity here. So the commercial loans, the average commercial loan across the country is $5 million. From there, you end up making anywhere from 1 to 3 points per deal. So you can make a good amount of money just by doing average size deals. Let's say you even do below average, $2 million deal, you're making 1 to 2 points on that. It's still a great payday for that. And it's investor focused. And so, these investors, they are going out and they are running the numbers on these properties. They're coming to you and they need to, take advantage of a purchase or a refinance to pull some cash out, or take advantage of a lower interest rate. they're ready to go. And so, and then like we mentioned before, much less competition. So you're not competing against other, loan brokers. Like Colton and I, we live pretty close to each other. Our offices are just a few miles away from each other, and we have never competed against each other with the same client. And so there's just a lot of deals out there and not a lot of competition. So, and then as you know, in commercial, it is the property is what qualifies the deal, not the borrower's income. And so, one thing that, we can quickly identify if you're a true commercial loan broker or a residential broker trying to do a commercial deal is by the how they present the loan, saying that, oh, my client's got an 800 credit score, he makes 500,000 a year, he's a strong borrower. Those things don't matter. And what really matters is the strength of the property, the cash flow of the property. And so another great opportunity with commercial is that they're short-term loans. And so the typical commercial loan is a 5-year term. And so every 5 years, but even before that 5-year balloon is, the clients are looking at, commercial loan options. They want to see, where rates are. They know that they have to take action to refinance their property. And part of that refinance is, they want to pull some cash out to purchase additional property. So there's a lot of repeat business. And probably the best thing about, the commercial world is that it's an open market. And so you can do deals all over the country. There's only a handful of states that require licensing, but you can, do all, loan programs and property types. You are not pigeonholed into, just doing business in your market or your state or, your loan program on the residential. There's a lot of different loan programs in the commercial world, and a lot that are great loan programs that are just not very familiar, even to the most seasoned commercial investor. And so, awesome. All right. Well, let's introduce our special guest, Keith Lorgan from Florida.
Keith is a good friend of ours, but he went through our commercial loan mastery training in Orlando, and went to one before that as well. And he is born and raised in California, I believe, and defected to Florida and has been in there for 27 plus years, it sounds like. So the reason we're bringing Keith on is because Keith has a long history in the residential brokerage world, and then went to our commercial loan training and has really stepped up his game on the commercial side of his business. And we just wanted to interview and talk to him and get his experience, because it might be more applicable to most of you on the call right now. And before we formally introduce Keith and have him jump on, two things. Number one, it looks like his video is not working, so you get to see his pretty picture while we're talking to him. So that is, I vouch for it. That is him. It really is. And you can look him up on LinkedIn and join him. He also put his contact information in the chat. And speaking of the chat is open. You're welcome to ask questions directed at Derek or myself or Keith as we're talking. We'll try to get to some of them during our discussion. And if we don't, we'll have a Q&A period towards the end as well in the next 20 minutes or so. So without further ado, let's introduce and welcome Keith Lorgan. Keith, welcome.
Hey, thanks, guys. Hey, my video looks to be working on my end, so I don't know if people see it, but I guess, yeah, people are saying they see it, but you guys can't see it.
No, we don't see it, Keith.
No, we may have done that on purpose. We don't want to see it in person.
I mean, maybe you didn't expand your screen enough. Whatever. Everybody's saying thumbs up. So, anyways.
Okay, good to know. So, tell me your background. I mean, your website, Harbor Commercial Lending is your current business. Tell me about your background in residential. How long you've been doing that? Kind of what business you were in there.
Yeah, so I've been 12 years as a residential loan officer. I started my own residential brokerage April of last year called Harbor Residential Mortgage. And I've worked for a variety of companies, some of them direct lenders, some of them last 5 years brokerage side. And So yeah, that's it in a nutshell, doing conventional FHA, VA, USDA, jumbo loans, non-QM, bank statement programs, reverse mortgages, the whole nine, and I'm still doing it. And perhaps for like a lot of you on the call, you're here because you probably get calls once in a while from a realtor that says, hey, do you do commercial loans? And like you, I mean, I would be like, well, yeah, we do, but, and then I'd have to go find, a lender, and then I'd have to kind of learn about it. And what really was happening is we were connecting with like a hard money lender, kind of disguised as a commercial lender. And I never really was able to kind of make that world happen. And then finally, I connected with these guys when they sent out that email, and I was like, you know what, this is what I need to do. I need to really commit to learning the business and being successful. And that's when I joined. That's when I did the commercial mastery in Dallas about a year ago.
So expand on that. Kind of what were you missing on the commercial side that you felt like you needed to educate yourself more to be able to do more business?
Well, what I did know is that it's a different conversation. I mean, you sort of alluded to it earlier, Derek, by saying, we're not in the commercial, it's all about the net operating income of the property. It's not about credit score, DTI. And so I knew I had to get training on what's involved in the conversation, what questions are being asked, how do you qualify the person or the opportunity or the property. I didn't know anything. I didn't know where to start. And so it was really important to find somebody that I could trust that could train me on that.
Great. So then you came across Derek's email. What struck you as interesting on that email that was important to you? I mean, we know on our end, but we haven't done residential for Derek over 10 years and me over 20 years. So we're not in your shoes. What struck you as something that was interesting and compelling for you?
Yeah, as I recall, the kind of what hooked me was something like alluded to the fact that we take residential loan officers or mortgage brokers, and we convert them into being, like I say, commercial loan broker assassins. That's that, I'm paraphrasing, but that's kind of what hooked me. And then I did a call, like a webinar, I think, with Derek, and it was like leading up to your event in Dallas. And right after I did that, I don't know, like webinar with Derek, I committed to going to the Dallas event. So it just kind of checked the boxes about all the things commercial that I didn't know anything about. And I'm like, these are the guys that are going to help me get to the next level.
Perfect. Well, let me, anyone have questions for Keith directly, just throw it on the chat and we'll ask Keith that question if we don't cover it already. So take us through kind of what you thought was important or the most important parts of what you learned when you actually went to the mastery class. We'll go over the mastery, by the way. Some of you are asking about it already, but it's we'll go over what that is, when the dates are, what it takes to come to one of our classes. But I wanted someone like Keith to kind of tell you from a residential loan officer background perspective what was important to him as he was learning. What did you learn there that you thought was valuable to your business? What did you think was valuable then versus what actually is valuable today, I guess is the question.
Well, I think for me, right out of the gate, I like the setting. It was a classroom style. Right out of the gate, you just open up a notebook, and I just started taking notes on everything these guys were talking about. And what I really loved were the case studies. Derek would say, "Oh, let me tell you about this deal that I did on this hotel. We got, they acquired a hotel. They flipped from a Hilton to a Marriott. Then we got them, $500,000 back to renovate every room, like all going through all of that." And then Colton would talk about an acquisition, maybe of a multifamily property and just all the nitty gritty. And then going through the exercise of a spreadsheet, kind of really underwriting the deal and looking at, okay, here's like a check, here's like 15 line items of expenses, like just getting to the real stuff. And then coming up with the net operating income, learning about all of that was something there's no way I would have ever learned what I learned, especially in 3 days or whatever, 2.5, 3 days. So it was hitting on all of that was really important to me. And it kind of gave me a structure, a foundation to say, all right, now I need to go out and start talking to developers, having conversations. That's really the key, is just start talking to people. And, you stumble a little bit, but the more conversations you have, the smoother you get with it, more confident you get with it. And then more opportunities will start coming your way.
Did you buy that sailboat with the commercial loan behind you?
That was a gift. Thank you. I did not buy it.
I like it. I like it. I do finally see you, by the way, but I see the boat as well. Well placed, the sailboat there. So.
Yeah, this is a green screen, so I thought it was kind of boring to do that right there.
Oh, nice. So Keith, when you got back from, commercial loan training, the mastery, how did, let's say Keith before the training and Keith after, tell us about your level of commercial loan understanding, and then also your confidence to go out there and start, working with, commercial investors.
So my confidence has just gone through the roof because I feel safe in walking up to somebody and saying, hey, I'm a commercial loan broker. We have thousands of funding sources. And, if you want to build this high-rise condo in Miami and you need $150 million for that, you want to talk to me because I know I can compete. I didn't know that until I went to meet these guys. Because when I went to Dallas, I had an article I cut out from the South Florida Business Journal.
I remember that.
Yeah.
And it was like, Goldman Sachs lends $108 million to XYZ developer for a condo, right? And I'm like, I go, guys, is this like, we can't really compete with them, can we? They're like, absolutely we can. So I just feel like this is a wide open opportunity, not only in my own backyard in South Florida, but it's nationwide. I don't need licensing. I can do deals anywhere. I'm actually proposing a multifamily deal to a guy in Philadelphia that was referred to me by a residential realtor. So I just think my confidence is big. And now I can say to somebody, hey, let me send you an email. Here's the handful of things I need from you in terms of documentation. And then we can get you a term sheet, which is really a proposal. But yeah, term sheet. I start using the lingo. And you know what? Everybody's on board. There's like no pushback. So it's really a matter of just uncovering more opportunities. And I've got some thoughts on how I'm going to do that. I can share later, but yeah.
Yeah, I mean, it's interesting you said that because it's funny. You mentioned it before, but it's hilarious to me that the market is so wide open and you're valued in a different way talking about commercial to commercial clients. They want to talk to you. They want to understand what's happening in the market. They want to know where rates are for the various different products or lender types. And so you could have a conversation with almost anyone in the industry. Now, the exception to that, which is funny, and everyone should take note of this on the call, if you call a lender or an owner, a commercial lender or owner, that's very seasoned in the industry, knows what they're doing. As Keith mentioned, if you're leading with FICO score and DTI and income and such, they automatically know you're residential and they won't take you seriously. Some will even hang up on you, as they had for me and many of our students years ago. So it's just funny. Once you talk the talk and walk the walk, you're part of the club, and it's easy to talk to many, most anyone in the industry, and that's where you really get some knowledge. I guess I'm surprised the question hasn't come up. So I'm going to ask it anyway, because I would guarantee many of you on the call are thinking about it. What have you done since the mastery class? And we wanted to have Keith on, maybe at our demise, not our demise, but maybe it doesn't look make us look as good. But I wanted Keith to come on because he's real. Keith, has a residential business, still runs it, and wants to do more commercial. And he's actually doing exactly as we taught in many scenarios. And he started a separate commercial group that is tied to the residential, but he has a completely separate commercial website than residential. And it's not a get rich overnight thing. It's not a you leave class and all of a sudden you made $10 million. It's no, you need to work at it. So tell us kind of, if you can, that process, the deals that you've been able to look at, if you have closed or approved any deals, what the commissions look like, and kind of how you navigate through running both sides of the business now.
Yeah, so I haven't closed a commercial deal yet. But let me explain a little bit about that. So this deal could have been closed 4 months ago. However, it's still out there for a number of reasons, and I think there's still a good probability we're going to close it. But
tell us about that deal really quick, a high level, what it is, how much.
So it's a relationship I have with somebody that had built an apartment complex in West Palm Beach, 96 units. They did so this is what I learned here. They get a construction loan. They did a $14 million construction loan, interest only, 10%. It's like a 24-month term, and it's past expiring. So they keep extending it every month until we can get it closed.
So one-time close is, just for everyone's knowledge, one-time close, construction to perm, construction to whatever is nearly non-existent right now in commercial. It comes and goes based on where rates are, but it's nearly non-existent. So you as a broker can make two commissions. You can do a construction loan and then year 2, 3 years later refinance into a permanent loan and make a commission there as well. So that's this scenario: construction loan, 2 years, and it was coming due, so they needed to refinance into a permanent loan.
And what they wanted to do is take cash out. From what I've learned is that there are banks that probably could do this loan, but they oftentimes they don't want to give the cash out. Like, when you do a cash out refi on a residential home, we know how that is. Well, commercial, it's not that common, right? So anyways, here's the juicy part of this whole thing. This is a $19 million loan. My compensation is 75 bips. So it's $142,000 commission. And if it's going to close, it's going to close next month. So feel free to stay in touch with me. I'll be happy to give you the update. But here's the powerful thing of being connected to these guys, and Colton specifically, because he's part of Walker and Dunlap. So a lot of you guys know what Fannie and Freddie is, right? Big agency lenders. Well, they have a multifamily division, and there's only 25 approved lenders nationwide that can do these loans for Fannie and Freddie. Well, Colton's company is Walker and Dunlap. They're one of them. And I think they're either 1 or number 2 in Fannie, or 2 in Freddie, or whatever, but they're massive and they're a powerhouse. So what we brought to this developer is the ability to do cash out based on the net operating income. So we're going to take out the $14 million construction loan, give them a $19 million total loan. They got $5 million they can just give back to some of the owners. Non-recourse versus recourse. Non-recourse means if the bottom falls out and the economy goes to zip and there's no value, they can walk the keys back in, hand it off. No recourse, right? They can't get sued. So that's huge. Banks don't offer that. And then the final thing and I know mortgage brokers and loan officers, the rate is ridiculously low. The rate we're right now, they have 3 options. I think it's like 5.08, 5.1, 5.2, something like that. A low fives on a $19 million deal, interest only option if they want it. So that's what's on the table for them. And I mean, the thing is, if all you had time to do was to call on multifamily for these cash out refi deals after the construction loan is due, you'd be inundated with business. I mean, there's so much opportunity out there, and it's just an untouchable deal. So it's a huge competitive edge to be connected to Colton through Walker and Dunlap for what I just said. So that's that's a big deal, right? You want to talk about some of the other ones?
Yeah, I mean, yeah, if you want, I mean, this just so everyone knows that deal is approved. So we're
Yeah.
just waiting for the borrower to say, okay, yeah, we'll go. Now their hesitation is that they wanted 20 million. So they wanted $1 million more than what we're approved for. And we might even get there because the loan amount could go up between now and closing if the rates go down. There's a direct correlation to, or an inverse correlation to rates and loan amount. And so loan amount could go up if the rates go down. And so they're doing their due diligence very smartly just to make sure there's no other better options out there. Now, Keith and I already know there's no better option, not even close out there. So we know they're going to come back and say, okay, let's go. So we're in this a little waiting period for them to discover by themselves that there's no better option because there's not in the entire country. Low fives, non-recourse, interest only. 30-year amortization if they choose the amortized payment. I mean, there's no better option out there. And so Keith is a month away from making 140 whatever $5,000 commission on that deal. And what's cool about that is, you know, many of us on the call that could last at least a year, sometimes longer. And that's what Derek was talking about at the beginning of the call. Commission, money. You make one big deal, and that could support you or your business for a very long time, or buy a very nice supercar if you really want. So yeah. I mean, any other deals that you want to talk about, or any other questions from the peanut gallery would be welcome. But yeah, if you have another deal to talk about that you're working on, that'd be good to hear about.
I'll just share another one where it was retail, like 2 pads, 20,000 square feet, like Starbucks and something else, a bunch of other things. And I brought in a bank, a local bank here, and it was like they needed $7.5 million. And we went down pretty far down the line. In fact, the bank had issued a term sheet. They were ready to go. And then kind of like at the last minute, the bank pulled out and they said, you know what? We're not, it's a small bank. You know, they lend like 200 million. I'm sorry, probably 20 million a year locally. So, or something like that. But this would have been a big chunk for them. And they just felt like there was other projects that had less risk. So they passed on it. And I think there was something else in the deal that they didn't tell me. I think there was something about this developer. I've asked other like commercial realtors in the area about this guy, and they're like, yeah, he might be a little shady. So they didn't want to take kind of a flyer on this guy. So anyways, but the process was really very helpful because I brought in the commercial loan broker from the bank, okay, with me. And I got one of the things you get from the training is like an agreement with like a template. Among other things, I had this developer sign it. So I have a deal with that guy. It says, hey, you know, when we close a loan, I make 1% of the loan amount. So anyways, I'm protected. And those guys are used to probably signing those things. So I have no problem asking people to sign a contract. If I'm going to go to work for them and clear the market with many different banks and credit unions, then I'm going to get paid. So, you know, that's how it works.
Yeah, that's a very good point, which we talked about in the training as well. But yeah, it's very commonplace to sign an exclusive agreement with your client to arrange financing for them for that deal. And it does two things. It obviously protects you as a broker to make sure that you get paid what you and the client agreed upon if you close the loan. Because in commercials, for many of you that don't know, there's hardly any lender paid compensation. It's all and it's all borrower paid on the settlement statement. So this is a way to protect your fee up front. But the other thing, which is a huge sale to the borrower and yourself, is it prioritizes the deal. If you have an exclusive agreement with a client and you know you're going to make money on that deal if you close it, then you're going to work as hard as you can to close that deal. And you're going to place it first above all the other deals that you may not have an exclusive agreement with. So the client likes that because they know you're dedicated to the deal, and you like that because you know you're going to make money if you do what you promise. So it's a good two-way agreement that is extremely valuable and very common in the industry. So I'm glad you mentioned that.
Can I
mention
mention
one more? Go ahead, Keith.
I just want to mention one other thing. This is where Derek shines, is like with SBA loans.
Yeah.
There are so many great opportunities where somebody wanted to buy like a storage center, they can use an SBA loan with 10% down, up to $5 million loans. There's really, I mean, that's a big part of the training is SBA stuff. But like there's a bank here that I work with, Celtic Bank, and there's a SBA specialist, commercial loan officer. That's all she does is SBA loans. And I have a deal where the guy was going to buy a building. It was going to build a med spa for a doctor, and they decided to lease, but they do need over $1 million to build it out, to get equipment, medical equipment, et cetera, et cetera. So this SBA is the best way to go, and this bank will basically kind of put it together for me, and the bank will pay me. That's actually a lender paid comp in that situation.
Yeah.
So I just wanted to share how SBA is great. I mean, just the tip of the iceberg, but it can be for non-acquisition of property. It's a business loan.
Exactly. Yeah. Yeah. I mean, SBA, I mean, we do a lot of SBA in our office, and, it's everything from, a little ice cream shop that wants to, open a second location, and they're not going to own the space in the retail center, but they still need, $400,000 or $500,000, $600,000 to do the build out and purchase all the equipment, to, much larger hospitality hotels, even self-storage that are, just bigger projects. And, you can make anywhere from, 1 to 2 points on SBA deals. So if not more. So, yeah.
The last question, well, let me answer one question from the chat really quick. If I understand, David Allen asks if you said that Walker & Dunlop would be contracted with, I guess, the MLOs on this call if you work with us. I'm not sure I understand the question, but if it is what I think it is, there's no in the commercial world, there's no signing up with commercial lenders. It's an open market, as Derek said earlier. And so there's no contracting with brokerages or brokers between lenders and brokers or brokerages
Or wholesale accounts,
nothing like that. But if I understand the purpose of your question, David, is yes, when you work with us, you'll now have a direct contact in me with the Fannie and Freddie loans. In being able to do those loans directly to a direct lender, which is me. We're one of the 25 that Keith mentioned. So
yeah.
So absolutely, yeah. When you work with us, you'll be able to access that us as a lender directly for sure. But the last question that I think most MLOs don't quite get until they're on your side, Keith, is what is the difference between the deals and the lenders that they may just know or fall on their desk as an MLO versus now in the commercial world? What types of deals and lenders exist on that side? Because there's a huge difference and many people don't understand that. What do you notice there?
I'm sorry, the difference in the lenders that we broker.
Lenders and deals that you just basically got by virtue of being a residential loan officer that kind of fell on your desk, like many on this call have, versus the types of deals and lenders that you seek and are available to you now that you didn't know existed.
If I understand your question, what's different is, I'm proactive I'm contacting, um, various funding sources on the commercial side, like, banks in my area, credit unions. I'm establishing relationships with that commercial loan officer at that bank. I'm looking for what they have, because they change their guidelines too, all the time. You know, sometimes they had a bad experience with a certain type of, commercial segment. Maybe, you know, it was, maybe a hotel chain. Like, oh, we're not doing any more hotels. Doesn't mean hotels are bad. Or maybe they had, one of their branches had a bad experience with a car wash, and they're, oh, we're not lending a car wash. But so they change all the time. And and some of those guys, they hate it. They tell me, look at Keith, we're just not doing any new construction right now. No, we don't know anybody that is. You just kind of look for the ones that are looking for that type of business, and I build relationships with those commercial loan officers at the banks and credit unions. And sometimes they can tip you off to, an opportunity. So I'll pursue that. And then I get involved with groups like CCIM, and I'm just getting my name out there, my face out there all the time.
Great.
Yeah, that's exactly what I was talking about. I guess to clarify on that, what I hear from almost everyone that I talk to that's a dedicated residential loan officer, the commercial opportunities that they see, we wouldn't call true commercial. They're very small, $200 to $1 million loan amount, and they're just strange, like maybe a building that has an apartment unit and an Airbnb and maybe a hair salon and something like that, which is technically commercial, but it's a very, very difficult deal. They seem to get a lot of the very deals that are not doable at all or extremely difficult types of deals. Whereas, and the lender pool, you have groups like Velocity and Silver Hill that call you directly, and they're great commercial lenders. I say that in quotes because they do commercial loans, but they probably represent about a 1/4% of the capability of the commercial lending market, and they're typically the highest interest rate in the entire country. And so they're lenders that I've never used in my entire career. And so now that Keith understands that, he's able to attract deals that are easier, higher quality, bigger commissions, and he knows where to go to find the capital source, the lenders, to lend on the types of deals that are much better than what was just readily available with most mortgage brokerages that may be represented here. So it's very different world on the other side, which we wanted to convey. But appreciate your time, Keith. I'm posting again his contact information on the chat right now. So anyone's that wants to reach out to him directly, he said, go ahead and do so. And thank you very much, Keith, for your time.
Yeah,
Appreciate
thank you, Keith. Thanks for jumping
Yeah.
on. All right. So yeah,
welcome.
we're just going to wrap up our webinar here. And so I know a lot of people are wondering, what the next steps are. If you're interested and ready to, make the leap into commercial lending, the next step would be to, join the Commercial Loan Mastery. So we have an upcoming one at the end of this month in Orlando, Florida, and it's a 3-day training. It's a Friday, Saturday, Sunday, and it's not a typical like seminar style. Like Keith mentioned before, it is a classroom setting. It's a heads down. You're going to learn a lot of information, and it feels like a long time, 3 days, but it goes by so fast for us and for a lot of our students. And it's funny that after, on day 3, they want it to go longer. So Colton and I, we always laugh, and say like, oh man, another day or two, like, because it's long days for us too, going through everything. But it's a ton of information. We give you all the tools, templates, and forms you'll need to, jump into, commercial lending. You get all the information, all the property types, loan programs, underwriting guidelines. We go through case studies. We show you exactly what you need to do from A to Z to, market, intake the loan, underwrite, process, and close and collect your commission. So if you're interested in that, there's a website right here at the bottom. You can click on that. You can get some additional information. You'll be taken to over here on the left. That's just a screenshot of the website, and from there you can click apply now, and you can schedule a time to speak with us. So from there, here are the things like I mentioned before. We also give you a list of over 500 lenders that you can work with. And so, we don't leave you empty-handed. Once you come to the course, we do hold your hand to make sure that, you get your deals closed, like Keith can attest to. So that's part of our guarantee. So our guarantee is, we don't want.
Yeah, can I just chime in? Sorry,
Yeah.
because I saw this stuff on the chat. I just want to say to anybody listening, I think that it's really important to be in business, any kind of business, with people that you trust. And I can say, Derek and Colton they're just solid guys. Like, they have high levels of integrity. They're good family guys, and I trust them. And so, like, I've been working closely with them for over a year, and I've had my colleagues go to their seminars. And here's the thing: if you want to make it in the commercial lending business as a loan broker, and you don't have any training, you're not going to figure it out on your own. Or maybe you could, but it might take you 20 years. So the thing is, you want awesome mentorship. You're getting it with these guys. Period. End of story. I know those guys are too humble to say that about themselves, but like, this person, like, who cares? It's just so ridiculous that they're putting stuff on there like that. But anyways, I just want to let people know how I felt about you guys.
Yeah, appreciate that.
Appreciate it. I wasn't even I did remove her, so everyone knows I did not want to remove her until she did it 18 times, and so I didn't want to spoil the chat for real questions. So again, thank you, Keith. This is literally the first time we've ever gotten a message like this in any of our webinars that we've done. So this is new. You've seen history. You've seen history. So but that's fun. One other question that we wanted to address, Mike, I think did it as far as licensing. I think we talked about it at the top, but maybe some of you came in later. Licensing, again, there's, I believe, only 44, or there are 44 states that do not require any licensing at all to do commercial loan brokerage, which Keith kind of alluded to as well. You could do a loan in any one of those states. The 6 states that do require licensing, 5 of them is the same as your residential license. There is no separate commercial licensing anywhere in the United States. And then the one that does require a different license is California, as we understand. My disclaimer is talk to your legal counsel and talk to your state to make sure all this is correct, and make sure that you're above board, because we support that. But this is our understanding. And California is the one that you either need a DRE, a real estate license, or you need to be a broker of record with an NMLS. One of those 2 options will allow you to broker commercial loans in California. So again, that's just another opportunity that we didn't even mention. Nationwide, you could go after any loans. And the reason, so you know, is that this side of the industry is not regulated. And the reason it's not heavily regulated is because commercial real estate investment property owners are accredited investors. They're high or ultra high net worth individuals or corporations. And they are responsible for their own investments and financially capable or deemed as such. And so the protections that the residential side have are not there on the commercial side, because it's an investment with high net worth accredited investors. So it's a great question.
Yeah. And you'll start working. I mean, when you get into the commercial world, you'll start working with borrowers and investors, and the question they always ask is, how much do I need to show? And you throw out a number of a minimum that they have to show based on what they're trying to purchase. They have to have enough for the down payment and about 6 to 9 months worth of reserves, and they don't even bat an eye. It's not even an issue for them. They have such a high net worth that it's all right. I'll disclose this account. However, if I need to show more, I have plenty more, and so it's a different world when you're working with commercial investors. So
That's that's a big distinction that I've noticed. You have to kind of shift your mindset as a residential guy. A lot of times we're doing residential deals and people are like, they're like no money left. They're getting gift funds, just trying to get the deal closed. When you go into this pond of commercial lending, it's like these guys said, you're dealing with high net worth individuals. And they know they're putting down 30%, well, 20 to 40%. And they have reserves. And in the case of agency multifamily lending, they have to have a net worth equal to the loan amount. So there's so much money in this space. You just have to kind of shift the thinking, and it's wonderful.
yeah,
Did we mention the price and everything here?
not yet.
Okay, so I know everyone's been waiting for this. The major thing with this is that this is an investment. This is to come to our 3-day training with all the bonuses and guarantees that Derek mentioned. It is a $5,000 investment. And that's why we mentioned, as far as the value is concerned, if all we did was teach you how to close one single deal, that's, call it $2 million, through what we teach you, you make 20,000 to 40,000 and you make 4x your investment there. And we know it's a stretch for some of you, but we are dedicated to making sure that you are successful and you make your money back on that. So that's why we have these guarantees in place, and they'll be in writing as well, so you have them. We want to make sure that you make your money back. And because it takes us a lot of time and effort as well to put these on and to spend time doing what we love, which is the education. But we are deal people. We do deals every day, all day. And if we were just an education company, we may be able to charge less and let thousands of people in and not be able to take care of them. And that speaks to kind of what that commenter was saying, is that the groups that do that all day, every day, and don't actually practice what they preach, that's the trap that they fall into. They don't help you on the back end. They don't actually know what's going on in the market in real live time and such. And so that's why we're structured the way we are. And so the next events, do we have the events on next?
It's before.
Oh, so someone just asked. So the next events, we have 2 events. If you go to commercialloanmastery.com, http commercialloanmastery.com, we have 2 events upcoming. They're the only 2 that we have scheduled. We may do some more towards the back end of the year. Well, we don't do this every month. We have Orange County
We finished Orange
we
County.
just finished Orange County. We have Orlando coming up at the end of this month, March 28th through 30th. And then in May, we have Dallas, May 16th through 18th. Those are the only 2 that we have scheduled. And we're happy to talk to you about details on either of those events, but it's everything that we talked about before as far as benefits and bonuses. And then we do the bonus for staying to the end, for you guys trusting us and jumping on our webinar. We appreciate it. We've never given, sorry, Keith, I'm saying this up front to you. We've never given a 20% discount on this weekend. We will give a 20% discount to those of you on this webinar. We know who you are, but you have to schedule a call to talk to us so we can give you more details to get that the discount code for the 20% off. So that is the bonus, and included. This is technically a 45-minute strategy session for free that will go over what your current business is right now, residential, and give you some tips and tricks outside of the mastery on pointing the right direction to doing more commercial loans. And obviously we can't give you the whole 3-day mastery over that call. but we could give you some pointers and directions on that 45-minute call, which, you know, is another value to you. So go to the commercialloantraining.com fast track to schedule a call with Derek, myself, or Tyke, who is on the call. It's one of us three. Yep, there he goes, raises his hand. He's the sharp looking gentleman. He's shorter than he looks. He's shorter in person than he looks, though. I'll tell you that. We came across a commercial of Tyke's. If you want to see that commercial, we'll just let us know on the call that he was in. Any questions? So we'll open it up to questions. The other question, I saw a couple on there, and we're past the hour. So if you need to go, we get it. If those of you that want to stay another 5 minutes for questions, we'll answer some questions. Someone wanted the 6 states that you need licensing in. I don't know for sure, so please check and double check. But we believe it's California, Nevada, Arizona, Michigan, and the Dakotas. Oddly enough, the Dakotas for some reason. So those are the ones that we are, I believe, are strict on licensing. And again, if you have a residential NMLS, all 5 of those 6, you're fine in. If you have an NMLS in that covers that state, and the 6th one being California, you need to be either a broker or a DRE. Someone asked for an email address. Please reach out to us directly if you have questions. Our email addresses are on the screen right now. How quickly do loans close? Typically, if it's a standard deal, it's around 45 days. We've closed, hard money deals in 1 week, and we've closed, very complex HUD loans in 18 months. So, but your standard deal is about 45 days, give or take. We provided you the dates. Okay. Any other questions? If you want to unmute yourself and ask questions live, feel free, or throw them on the chat, and we'll see if we get to those questions. And those that you need to run, appreciate your time.
Yeah, thank you.
Good to meet you virtually, and we'll talk to you on the phone calls. Any questions? Tim, you had a good question. Did we cover your question, Tim Allen?
Yeah, I think you guys did.
Okay.
Derek, I'm gonna reach out to you guys in just a little bit. Okay.
Okay.
Sounds
Good.
good.
Good. I'm glad to see that you're not Tim the Tool Man. So you're a real guy. Good.
I do a lot of construction. It helps out a lot, believe me. All right.
That's great.
So okay.
All right, I'll call you guys in a minute. Thank you.
Thank you, Tim.
Great, everyone. I appreciate your time. And, feel free, like Colton mentioned, reach out to us, and if you have any questions. So I know, let this information sink in, and I can't wait to see you guys in Orlando or Dallas. So
warm Orlando, let's go. Good to talk to everyone. Thanks.
Thank you.